Hello students, in our previous lecture we are studied a practical problem on conversion of single entry. In previous lecture we prepare a cash account to know the closing balance of cash. We also prepare a total debtors account to know the closing balance of debtors, and we also prepare a total creditors account to know the closing balance of creditors. Okay, in our today's lecture we are going to prepare a trading account, profit and loss account, and balance sheet. Okay, so problem number 4th, Mr. Santosh keeps his books of accounts on single entry. He gives you the following information relating to 2019-20. So Mr. Santosh has keeps his books under single entry system. We have to convert the single entry system into double entry system and the information relating to 2019-20. First, a balance sheet as on 1st April 2019. So the balance sheet is opening balance sheet. Okay, 1st April 2019. Liability side, first of all I read liability side. Capital rupees 33,000, creditors rupees 3,000, bills payables rupees 1,500. Asset side, machinery 10,500, bills receivable 3,000, sundry debtors 9,000, stock 7,500, cash and bank balance 7,500. Total of both the sides is 37,500, 37,500. Next, B part is given here, that is summary of cash transactions for the year. Okay, so the summary of transactions is given for the year. So first of all I read the receipt side, to cash and bank balance brought down. Okay, so here see the opening statement of affairs. The opening cash, okay, is brought forward in cash account on debit side. Okay, so opening cash is rupees 7,500. Okay, then to capital on 1st October 2019 rupees 4,500. It means the additional capital was introduced by Mr. Santosh. Okay, and this additional capital is add in your capital. Okay, then to receipt from sundry debtors amounted rupees 18,000, to cash sales rupees 3,000, to bills receivable rupees 3,750, to sundry receipt rupees 600. Okay, so cash received from debtors. Okay, so here also we give an effect. Okay, so uh, cash sales, it is also transferred to trading account credit side. Okay, bills receivable received during the year. Okay, uh, this balance of bills receivable is transferred to bills receivable account. Okay, sundry receipt, okay, sundry receipt is transferred to credit side of profit and loss account. Now we read a payment side. By paid to creditors rupees 15,000, by machinery on 1st January 2020 900, by bills payables rupees 1,500, by drawings 1,500. Drawing is less from capital. By freight is transferred to trading account. Okay, freight. By wages and salary transfer to trading account. Rent and rates transfer to profit and loss account. Sundry expenses transfer to profit and loss account. By closing cash balance 11,850. Okay, so the closing balance of cash is transferred to asset side on asset side of balance sheet. Okay, asset side of balance sheet. Okay, total is debit side or receipt side is more, that is 37,350, put this total on the credit side and the balancing figure is 11,850 is called closing balance of cash. Got it? Now C part, other information as on 31st March 2020. It means the at the end of the year the information or adjustment is given. First, sundry debtors rupees 12,000, sundry creditors rupees 6,000, stock rupees 7,500, bills receivable rupees 4,500 and bills payable rupees 3,000. Okay, so here uh, the closing balance of sundry debtors, sundry creditors, stock, bills receivable and bills payable is given. So here no need to prepare a working note to find out a closing balance. Okay. No need to prepare a working note to find out a closing balance of debtors, creditors, stock, bills receivable, bills payable. Then second adjustment, credit purchase and credit sale is also given. So no need to prepare a debtors, creditors, bills receivable, bills payable account to open a account, because all the balances is given to you, that is closing balance as well as credit sales and credit purchases is given to you. So no need to prepare a working note to find out these balances. Okay. Third adjustment, allow interest on capital at 5% per annum and depreciate machinery by 10% per annum. Okay, so on capital of the Mr. Santosh, allowable interest at 5% and depreciate machinery by 10% per annum. And on this information we have to prepare trading account, profit and loss account and balance sheet as on 31st March 2020. Okay, got it? So very easy problem. Now we solve this problem. Here solution, solution in the books of Mr. Santosh, in the books of Mr. Santosh, trading and trading and trading and profit and loss account for the year ending 31st March 2020. Okay, 2020. Debit debit and credit. Debit and credit. Okay, then particulars rupees. particulars rupees rupees. Okay, then we start to solve a problem. Okay, so first, opening stock. So opening stock is given to you in opening statement of affairs. Okay, so this stock is opening stock. Okay, opening stock, opening, and opening stock is transferred to which account? Trading account, debit side. Okay, trading account, debit side. Got it? Trading account, debit side, because the balance sheet is given and this balance sheet is opening balance sheet. Okay, so opening balance sheet balance transfer to respective accounts. Okay, that is opening balance of stock is transferred to trading account, debit side, amounted to rupees 7,500. Okay, got it? So here, to opening stock, to opening stock amounted to rupees 7,500. Okay, got it? Then we transfer a purchases. So find out the purchases. So here purchases, so cash purchase is not given. Okay, so credit purchase is given, so transfer this credit purchase, okay, to trading account, debit side, to purchases amounted to rupees 21,000. Okay, got it? Purchases rupees 21,000. Then we transfer all the expenses related to trading account. So see the payment side of cash transactions here. Paid to creditors not related to direct expenses. Machinery transferred to closing balance sheet asset sides. Bills payable liability side. Drawing is personal use. Okay, so deduct from capital. Freight is direct expenses. Okay, freight is direct expenses, so freight is transferred to trading account. Okay, all the direct expenses is transferred to trading account. So here, to freight, to FREIGHT, freight amounted to rupees 750, amounted to rupees 750. Okay, amounted to rupees 750. Next, wages and salary. Wages and salary is also here. Wages and salary is direct expenses, but salary and wages is indirect expenses. Okay, got it? So wages and salary direct expenses, salary and wages is indirect expenses. Remember this. 4,500. Okay, so it is also transferred to trading account, debit side, to wages and salary amounted to rupees 4,500. 4,500. Okay, now see the another direct expenses which is related to trading account. No any single expenses which is related to trading account. All these are rent and rates are indirect expenses, and expenses is indirect, it is transferred to debit side of profit and loss account. Okay, so here, okay, then now we complete the credit side of trading account. So on the credit side of trading account, we write a sales which sales, so cash sales and credit sales. Okay, so cash and credit both sales are given to you. Here cash sales is rupees 3000. Okay, cash sales is rupees 3000, so write it, cash sales in inner column amounted to rupees 3000, and credit sales is given to you in adjustment. Okay, so credit sale is rupees 26000. Okay, credit sales is given to you, credit sales rupees 26250. Okay, 26250, got it. So make the total of this, and the total is write down on outer column, that is amounted to rupees 29250. Okay, 29200, 29250, 29250, 29250. Total is outer column. Then on trading account we write a closing stock. So find out the closing stock, and closing stock is given to you in additional information, that is here. Okay, closing stock amounted to rupees 7500. Okay, 7500, that closing stock is transferred to. So closing stock is transferred to credit side of trading account as well as closing balance sheet asset side. So always closing stock has two effects. First is on credit side of trading account, and second is on balance sheet asset side. Okay, but which balance sheet? So closing balance sheet asset side. So here by closing stock amounted to rupees 7500, 7500. Okay, so we prepare a trading account. Okay, so all items related to trading account is transferred. Now we prepare a profit and loss account and balance sheet. Okay, so here now we prepare a balance sheet. Balance sheet as on 31st March 2020. Okay, so here we are transfer or make the entries related to balance sheet and profit and loss account. So first of all we prepare trading account, now we prepare profit and loss account and balance sheet. So here machinery, bills receivable, start from asset or liability, anyone. So we start from liability side. Capital, opening capital is transferred to closing balance sheet as closing capital. Capital capital, write down the amount of capital in inner column, because additional capital, net profit and drawing, we less or add these items from the capital. So capital is 33,000. Okay, then creditors, creditors is transferred directly to closing balance sheet. But here the creditors is given and that creditor is opening balance. Okay, we need to transfer a closing balance of creditors to closing balance sheet. Okay, got it. So this amount is not taken into consideration. Here in your adjustment, the closing balance of creditors is given to you. Here sundry creditors amounted to rupees 6,000, which is given to you in your adjustment. So only closing balance which is given should be taken into consideration while preparing the closing balance sheet of the organization. So here creditors and directly we write the amount in outer column, that is 6,000. Okay, got it. So creditor closing balance is transfer. Then bills payables, so this balance is opening balance. We need to find out a closing balance, and closing balance of bills payable is also given to you in your adjustment here. Okay, so bills payable is rupees 3,000. Transfer this 3,000 on liability side. Bills payable amounted to rupees 3,000. Got it? Yes sir, 3,000. Then find out any other liability given to you in your opening statement of affairs or in adjustment. So here no any liability is given to you in your adjustment, only interest on capital is given. We calculate the interest on capital at the last of the problem. Okay, first of all transfer all the items to respective accounts, then we prepare a working note to calculate or compute a interest on capital. Okay, so here we transfer capital. Okay, capital transfer, we closing balance of creditors and bills payable is transferred. Now we transfer asset side. Okay, so here machinery, here no closing balance of machinery is given, so this opening balance is our closing balance. So transfer machinery to respective balance sheet. It means to machinery is transferred to closing balance sheet, amounted to rupees 10,500. But here on machinery some adjustment is given, so write down the amount of machinery on inner column. Okay, inner column, because we purchase additional machinery on 1st January 2020. Okay, so here so adjustment is given and adjustment is given, so we write it the amount in inner column. Okay, So inner column also depreciation is given here. Okay, so the adjustment is on machinery, so we write it the amount in inner column. Okay, next asset is bills receivable. So amount of bills receivable or closing balance of bills receivable is given to you. So in additional information, the closing balance of bills receivable is given to you, that is amounted to rupees 4500, and that balance is transferred to balance sheet asset side, that is bills receivable 4500. Okay, only transfer the items to respective accounts. Bills receivable and amount is write down to outer column, that is 4500. 4500. Okay, then see the opening balance sheet. So sundry debtors, amount of closing balance or sundry debtors closing balance is given to you, that is 12,000. Okay, so transfer this 12,000 to asset side. So here sundry debtors 12,000, 12,000. Okay, then stock is transferred to trading account credit side. So the same posting will be on the asset side, because closing stock is our current asset. So stock amounted to rupees stock amounted to rupees 4500, sorry, 7500, 7500, as well as to find out a closing balance of cash. So here see, this balance is known as closing balance of cash. Okay, because it is balancing figure. So closing balance of cash, and closing balance of cash is also our assets, current assets. So transfer this closing cash balance to the asset side of closing balance sheet. Cash balance, cash and bank balance amounted to rupees 11,850. Okay, 11,850. Now we transfer all the items related to closing assets. Now we transfer items related to profit and loss account. So here bills payable paid, the effect is given to particular or respective accounts. Okay, that is on working note, so that we get a closing balance and credit purchases of the sundry debtors, sundry creditors. So okay, so here sundry receipt is our income. Okay, so it is transferred to profit and loss, P and L account, credit side. Okay, rent and rates is the expenses, debit side of P and L account. Same as it is sundry expenses is also expenses, so it is also transferred to profit and loss account, debit side. Okay, So here transfer this. So here by by sundry sundry receipts sundry receipts amounted to rupees 600. Okay, 600. Then find out any other income given to you. No. So here no any other income, so transfer the expenses related to trading and profit and loss account. So here to to rent and rates amounting to rupees 300 and sundry expenses to sundry expenses amounted to rupees 1050. Okay, 1050. So we transfer all the items related to trading and profit and loss account. Now we prepare a only drawings are remaining. Okay, all transfer to respective accounts, only drawing is remaining. Okay, and additional capital. Okay, so the drawing and additional capital is add in opening capital and drawing is deduct from capital. So first of all we find out a interest on capital and depreciation, then we prepare a or transfer a drawing or additional capital. So here allowable interest on capital is 5% per annum and depreciate plant and machinery at 10% per annum. So we prepare a working note to find out here working note calculation of interest on capital. First of all we calculate the interest on capital, then we post this interest on capital to profit and loss account debit side, because it is a expenses of the business and it add in the capital of the partner because it is the addition or gain of the partners or Mr. Santosh. Okay, so calculation is here. First of all the first point, 5% interest on 5% interest on rupees 33,000 for complete year. It means the capital, see here in opening statement of affairs, 1st April 2019 the capital is used for 1 year, so interest is given to that capital is 5% for full year, and additional capital was introduced by the Mr. Santosh on 10th October 2019. Okay, so we calculate separate interest and then we add this interest and then we transfer the entries or adjustment. So for 1 year the amount is, so here 5%, 5 divided by 100 multiplied by 33,000 is equal to amounted to rupees 1650. Okay, so 1650 is a interest on capital for completing 1 year. Okay, that is 33,000, 5% on 33,000. Okay, then 5 divided by 100. Second point, that is 5% interest, 5% interest on rupees 4,500. Okay, which is given to you in summary of cash transactions. Okay, so this additional capital. So count the months. So Mr. Santosh has introduced capital on 1st October 2019. Okay, so October, November, December, January, February and March. It means 6 month or half year. For 6 month or half year. Okay, so compute half year interest. So here 5%, 5 divided by 100 multiplied by 4,500. Okay, divided by 1/2. Okay, divided by 1/2%. Okay, so amount is equal to 500 so amount is 112.50. it means 112.50. so the above 0.50 we consider it as 113. Sorry, the amount is 113. Got it? Is equal to 13. Got it? So make the total of that interest. So total is, so the total is 1763. 1763 is the total interest, and that interest is add in capital, and second effect is given to the debit side of profit and loss account. So here we add additional capital add additional, that is amounted to rupees 4500, 4500. Then we add interest on capital, interest amounted to rupees 1763, 1763. Okay, then we give a second effect of interest on the debit side of profit and loss account, that is here 2 interest, interest on capital, because it is expenses of business, business expenses transfer to debit side of profit and loss account. Got it? 1763. Okay, then a transfer capital. Now we transfer, now we transfer a additional capital interest. Now we make a working note to compute a depreciation. Okay, so last adjustment is second compute 900. Okay, so machinery was purchased on 1st January 2020, 900. Now we make a working note